Hello everyone and welcome to this episode of Ignition Time. Folks, this is new information that's emerging about the $10,200 unemployment benefit, the federal tax exemption on $10,200 of unemployment benefits in 2020. Folks, this is brand new reporting. Welcome to this channel. Welcome to Ignition Time. Let's just jump right in. Here's a new headline from CNBC. Some states require amended tax returns for the $10,200 unemployment tax breaks. Now, we all know about the American Rescue Plan, which included $10,200 in federal tax exemptions for individuals receiving unemployment benefits in 2020, as long as they were part of a household that made less than $150,000. So the IRS is indeed issuing refunds automatically to taxpayers who filed a return before the unemployment exclusion became law, before it was signed into law by the president. But the problem is that even though the IRS is doing this, keep in mind the IRS is a federal agency. So the IRS represents the federal government when it comes to our taxes. But the states, because we all have to pay state taxes depending on which state you're in. This is a general video. So again, your state has its own tax laws. But the problem here is many states are not automatically recalculating taxes, just like the IRS is recalculating taxes. And therefore, as far as your state is concerned, an amended tax return may be required. In fact, it is going to be required for specific states. Now, here's the problem. Many individuals file their tax returns. They wanted to be ahead of the curve. They wanted to be, shall I say, more responsible. And then the American Rescue Plan was signed into law. This actually created a problem for those who filed early. And now those individuals are like, hey, wait a minute, where's my refund? Am I going to get a refund? So here's what's going on. Many people file their returns without claiming the tax break because they were early to file. This means that these individuals likely overpaid and are owed a refund by the IRS. In fact, here's a quote from Albert Campo, who's a certified public accountant. There are probably a ton of people who got unemployment who rushed to file. People are still in panic mode and want a refund as soon as possible, because with the $10,200 federal tax exemption, you get a refund from the federal government and the IRS will do that automatically. But states may not do that automatically. In fact, some states are going to follow the guideline from the federal government and not charge taxes on the unemployment benefits, $10,200. But other states are indeed charging taxes, and different states have different guidelines regardless of whether they charge you taxes or not. The different states have different guidelines, and different states require you to file an amended return whether you have an exemption in the state or not. This is what makes it more complicated. Again, there are two levels that we need to consider here. One is your state charging taxes on the unemployment benefits? And number two, does your state require an amended return? These are two mutually exclusive things. These are two different things, but they are in some ways interrelated, and this is what causes confusion. So here's part of the confusion. A dozen or so states are not offering the federal tax break on unemployment benefits, meaning that workers will have to pay state income taxes on those unemployment benefits. I want to be as clear as I can about that. Now, there are states that did indeed adopt the federal tax policy. The problem is, even if they adopted the federal tax policy, they may not issue the refund automatically like the IRS, which means that these states, even though they are not charging you the taxes, they may require you to file an amended return so that they can have the correct information on file, and so that you can get a refund if a refund is owed to you. Now, let's show you this chart courtesy H&R Block. And by the way, this chart was published in the CNBC article. You'll get a link to the CNBC article in the description section below, so definitely check out the chart. And again, this is from H&R Block. This represents the states where taxpayers get a break on unemployment benefits and states that do not get a break. Let's start with the states in the dark blue color, which represents no tax on unemployment benefits. As you can see, states like California, Nevada, states like Montana, Wyoming, South Dakota, Texas, Arkansas, Tennessee, Alabama, Florida, Virginia, Pennsylvania, New Jersey, New Hampshire. These states are not charging tax on unemployment benefits. So for residents in these states, there is no federal income tax up to $10,200 on unemployment income in 2020, and no state tax on the unemployment benefits up to $10,200 in 2020. Now, each state may have its own specific regulations. I'm not able to address every single state in this video, but I do want you to know that every state is different, and I think this chart will essentially give you a strong starting point, and it's quite possible that by the end of watching this video, you might know more than your accountant. So let's take a look at states where benefits are actually taxed. Even though the unemployment benefits up to the limit of $10,200 are not taxed by the federal government, there are states where states charge state taxes on benefits. These states include Idaho, Colorado, Mississippi, Georgia, South Carolina, North Carolina, Kentucky, West Virginia, New York, and Minnesota. So as you can see, there are many states where the unemployment benefits are indeed taxed, and there are states where tax forms allow taxpayers to claim the break, and there are states where the tax is indeed waived up to $10,000 per person. And there are certain states where there's a partial waiver of unemployment benefits. You can see states like Wisconsin and Indiana have a partial waiver on unemployment benefits. So you definitely want to make sure that you know your state regulations, and if necessary, talk to an accountant or get in touch with the state so you have clear guidelines on how you can get in touch with the states to get all the refunds and all the credits that you are entitled to, that you are eligible for. And like I mentioned, different states have different guidelines. Let's take the state of New Mexico, for example. It is suggesting that eligible taxpayers file amended returns. Doing so could mean a lower tax rate, a larger refund, and qualification for additional tax credits and exemptions for which individuals were previously ineligible. Folks, when the unemployment benefits up to $10,200 are not considered as income, and if this is something that the state is also honoring, and by the way, this is what makes this more complicated. The federal government will honor this. That's why the IRS is doing a lot of the refunds automatically. But states may or may not honor it because states have their own guidelines. But if you qualify and if you have a lower income because of the exclusion with unemployment benefits, the $10,200 with the federal government and with the state, you are now eligible for additional tax credits. And therefore, you really want to take a look at this closely, because technically reducing your income thanks to the exclusion would and will make you more likely to qualify for additional credits. Now, here's the complication, and this again is an indicator of how different states approach this differently. The Massachusetts Department of Revenue is urging payers who already filed their 2020 returns without claiming the tax break. It's telling them, hey, don't file an amended return. And this is what the agency said. If a taxpayer is eligible for a refund, the department will issue a refund payment to the taxpayer, and the taxpayer need not to take any action. So the Massachusetts Governor, Charlie Baker, signed a law on the 1st of April offering the tax benefit to households whose income is less than 200% of the federal poverty level. So it looks like some states are instituting guidelines that are income specific. Now, I want to be clear, there are 12 states that are not offering the unemployment tax break. Again, they are not offering the unemployment tax break. These states are Colorado, Georgia, Hawaii, Idaho, Kentucky, Minnesota, Mississippi, North Carolina, New York, Rhode Island, South Carolina, and West Virginia. Also, to our viewers and subscribers, if you want a detailed update about what's going on specifically in every state, we'll provide you with a link to this document that you see on your screen right now. This document is from H&R Block. This provides a state return filing guidelines, and again, this is from H&R Block, and this provides you with specific guidelines for specific states across the country. Let's take a look at Alabama, for example. Is my state ready for me to file today? No, please wait for an update. Alabama does not conform to the federal rule, but instead offers a full unemployment compensation exclusion under state law. So again, each state is different. We'll provide you with a link to this document. Please use the links in the description section below to access this document and the articles referenced in this video so you can come to the right conclusion about your specific situation in your specific state. Also, like I mentioned earlier, some states are not correcting the returns automatically, and some states are. Some states are telling taxpayers to file an amended return to accurately reflect their income and to accurately reflect the exclusion associated with the unemployment benefits. This is the case with New York, for example. In fact, according to the Department of Taxation and Finance in New York, they said this: if you already filed your 2020 New York state return and you did not add unemployment compensation that was excluded from your federal gross income, then you must file an amended return from New York State. So basically, New York is saying, well, you have to tell us whether you got the income or not, and you have to file an amended return. Think about this for a second. New York is saying you're filing a different return with the exclusion to the federal government, and you're filing a different return without the exclusion that you had for the federal return. So therefore, your return is technically different from for the federal government, because the federal government wants you to exclude it and not pay taxes on it. But New York is saying, no, you have to include it so that we know how much money you made, and so that we can charge you state income tax for your unemployment benefit income. Well, I'm going to call it income because it's traditionally considered as income. But this again is very ironic. A different federal tax return, including the exception, and a different state tax return, so that the state can know that you are paid unemployment benefits, and so that the state can charge you state income tax. Think about how nuts that is. By the way, if you're in New York, here's the web page of the Department of Taxation and Finance for the state of New York, and it highlights the response from the tax department to the entire pandemic, a message from the commissioner if you're into that kind of stuff, and as we scroll down, a bunch of frequently asked questions about your state tax returns. Folks, I have to admit, this is an unnecessary and a very stressful situation, and a rather bizarre level of complication where the states are not in sync with the federal government in states like New York and several other states. Like I mentioned, there are 12 states that essentially will continue to charge taxes on unemployment benefits, potentially leading to individuals filing a different return to the federal government, which says, hey, if you didn't include your unemployment benefit income, that's okay. If you included it, we'll give you a refund, don't worry about it. But the states are like, hey, if you excluded it when filing it to the federal government, you need to include it when filing it to us. If you included it, then you may need to resubmit it, and you may need to amend it and resubmit it based on what the state is saying. So again, different states are saying different things. And finally, as if this was not enough, there are certain states like Arizona and Vermont, they are allowing residents to claim the tax break on state forms, but have not officially adopted the federal rule according to H&R Block. If they ultimately don't, an amended return may be necessary in those states, even though the states are saying something different right now. That is where things stand, everyone. That's it, everyone. Listen, I hope this made sense. I encourage you to watch this video again, and I encourage you to please click on the links in the description section below so you have a clear idea of what's going on. Thank you so much for watching, everyone. My goal is I work as hard as I can to educate you, because I want to help you make sense of these unbelievable times that we live in. I work hard on this channel, and all I ask of you is you please click the like button, please subscribe, please enable notifications. That would mean a lot to me. I would really appreciate that. Thank you so much. I'm looking forward to seeing you in the next episode of Ignition Time. Take care. Bye.